students, welcome to Sunil's tutorial. I am Sunil Milwani and today we will be doing this chapter called as internal reco. Let's start. We are doing question number 9 in the books of Messrs. Careless Limited. We are doing illustration 9 in the books of Careless Limited. Journal. Right, let's start. They've given you that preference dividend was in areas for 4 years. There's a contingent liability of rupees 20,000 for workman compensation. The following scheme of reconstruction was approved and implemented. Preference shares to be reduced to rupees 750. First, let's write the rule down. LAAL. Increase, decrease, increase, decrease. Positive, negative. Right? Now, preference shares to be reduced. Preference shares to be reduced. Liability going down. Capital reduction on the credit side. This is your debit side, and this is your credit side. So let's start. Preference share capital. This is 8% preference share capital. 8% preference share capital account debit. Capital reduction, 8% preference share capital account debit to capital reduction. Now, the preference shares reduce. Someone will have to give me the answer, guys. Please keep your calcies with you. Shares reduced. Now, they are saying that preference shares were reduced to rupees 750. Now, they are presently valued at 10 rupees 50 paisa. That means each share is being reduced by 2 rupees 50 paisa. 2 rupees 50 paisa on 40,000 shares. Someone please calculate 2 rupees 50 paisa on 40,000 shares.
1 lakh.
1 lakh. Right. Next, equity shares to be reduced to 2 rupees each, fully paid up. Liability going down, capital reduction on the credit side. So in that case, this will be equity share capital account debit to capital reduction. Being equity shares reduced. Right? Now they are saying that it is reduced to 2 rupees per share. Presently the value is 10 rupees. That means each share is reduced by 8 rupees, 30,000 shares. So 2,40,000. 3 rupees per share on 30,000 shares will give you 2,40,000 rupees. Right? Next, let's move on to the next thing. After reduction, both classes of shares were consolidated into 10 rupees per share. Now, consolidated to 10 rupees per share, that means I'll take the old share and I'll give you a new share on which I'll write this is a 10 rupee share. Debit what comes in? 8% preference share capital account debit, right? To, I'm going to give you a new 8% preference share capital to 8% preference share capital, right? Now these were of 7 rupees 50 paisa, these are of 10 rupees. So this is called as consolidation entry, where you take in the old share and you give a new share. Same everything except that the number of shares will change. Right? Now, as per the balance sheet, your preference share capital was 4 lakhs, out of which 1 lakh you have written off. So that leaves you with 3 lakhs. Being preference shares consolidated. Right, same way you have to consolidate the equity share also. So this will be equity share capital account debit to equity share capital. Now, equity share capital as per your balance sheet was 3 lakhs, out of which you have written off 2,40,000. So what remains is 60,000. equity shares consolidated. Right. Next, let's move on ahead. One new equity share of rupees 10 each was issued for every 40 gross dividend in areas. Let's find out preference dividend. Right. Preference share capital as per balance sheet is 4 lakhs. Preference share capital as per balance sheet is 4 lakhs. These are 8% preference shares, and at the end of the balance sheet they've said that preference dividend is in areas for 4 years. So multiply by 4. Someone please help me get this answer. On 4 lakhs, 8% for 4 years. Someone please get me that answer.
1,28,000.
1,28,000. Right? Now, they are saying that one new equity share of rupees 10 is to be issued for every 40 gross preference dividend. Dividend equity. One equity share is to be issued for 40 rupees of dividend. I just calculated the dividend to be 1,28,000. So how many shares will I issue? 1,28,000 into 1 divided by 40. Someone please help me calculate.
3,200.
3,200. So I'm going to be issuing 3,200 equity shares of rupees 10 each. Issue. That means equity share capital will come on the credit side. Now, since the word preference dividend is not given to you in the balance sheet, I cannot use the word preference dividend in the journal. So this will be capital reduction account debit. Capital reduction account debit to equity share capital. Right? 3,200 shares of 10 each, 32,000. Being preference dividend paid. Next, once this is done, they said that the balance of security premium was utilized. Okay, we'll see that. That is, the meaning of that is the tallying figure of your capital reduction would be security premium. They specifically told you. Machinery was written down to 2,80,000. Now my balance sheet value of machinery is 3,20,000. They are saying that it is to be written down to 2,80,000. That means my value of asset is going down. Asset going down means capital reduction on the debit side. So this will be capital reduction account debit. Capital reduction account debit to plant and machinery. Right? It is, as per the balance sheet, it is 320. The new value is 280, that means 40,000. It is being written down by 40,000. Right? We'll do one thing, we'll make a combined entry. The next entry says that furniture. No, okay. I thought it was written down.
So they did the entry, it's 3,200, 32,000.
32,000. 3,200 shares of 10 rupees each are issued. Being plant written down. Right? Next, let's move on ahead. Furniture was sold for 64,000. Sold. Debit what comes in, money is coming in. Sold. Debit what comes in, credit what goes out. Furniture is going out. Now, the balance sheet value of furniture is 80,000. The balance sheet value of furniture is 80,000. They are saying that you sold it for 64,000. The difference is to be written as capital reduction. No. In this sum, wherever there is a difference, that difference is to be written as capital reduction. 16,000. Being furniture sold. Next, let's move on ahead. Goodwill, preliminary expenses, debit balance of profit and loss account, debts of 17,200, obsolete stock of 20,000 to be written off. All of these are assets. Assets written off. That means capital reduction on the debit side. So this will be capital reduction account debit to goodwill. Goodwill is 1,10,000. To preliminary expenses. Preliminary expenses are 5,000. Next, to profit and loss. Profit and loss is given to you as 1,38,400. Then to debtors, they are saying that debtors of 17,200 have to be written off, and to stock, they are saying that stock of 20,000 is to be written off. Someone please add all that. The assets written off.
3,36,000.
No, it's not 3,36,000.
29,600. No, 2,90,600.
2,90,600.
90,600.
2,90,600. Right? So this is being assets written off. Next, contingent liability for which no provision had been made was settled for 14,000. However, an amount of 12,600 was recovered from the insurance company. Let's see this. Contingent liability was settled. First, let's settle. Settle means I have to pay money. Money is going out. I don't have the word contingent liability in the balance sheet, so I cannot use the word contingent liability. So this is going to be capital reduction account debit to bank. Now the contingent liability was for 20,000. Now they are saying that it was settled for 14,000. Right? Contingent liability was settled for 14,000. Being contingent liability paid. Right? Now they are saying that although we have paid this, we have recovered some money. We have recovered 12,600 from insurance company. Debit what comes in? Money is coming in. Bank account debit. We do not have the entry insurance claim on contingent liability in the balance sheet, so I cannot use it in the journal. This will be to capital reduction. Any word which you do not have in the balance sheet, you do not use that in the journal. Reduction. Amount is 12,600. Claim recovered. Next, let's move on ahead. Debenture holders agreed to forego the principal amount of 30,000 and accrued debenture interest in full. Liability going down, right? LAAL. Liability going down. That means capital reduction should be on the credit side. Now debenture holders, so 9% debentures account debit. They agreed to forego the interest also. Accrued interest on debentures debit to capital reduction. They have agreed to forego 30,000 of the principal amount, and they have agreed to forego the interest, which is 5,400. So this is 35,400 being debenture claim waived. Right? Okay. Once this is done, leave space for one journal entry and make capital reduction account. Leave space for one journal entry and make capital reduction account. Right? capital reduction on the credit side by 8% preference share capital, which is going to be 1 lakh. Then on the credit side by equity share capital is going to be 2,40,000. Then capital reduction on the debit side to equity share capital. Equity share capital amount is 32,000. Then you have capital reduction on the debit side to plant and machinery. Plant and machinery is 40,000. Then you have capital reduction on the debit side to furniture. Furniture is 16,000. Then you have capital reduction on the debit side to goodwill. Goodwill is 1,10,000. Then you have preliminary expenses. Preliminary expenses is 5,000. Then you have to P&L. P&L is 1,38,400. Then you have to debtors, 17,200. Then you have to stock. Stock is 20,000. Then you have capital reduction again on the debit side to bank, 14,000. Then you have capital reduction on the credit side by bank, 12,600. And then you have capital reduction on the credit side by 9% debentures. 9% debentures is 30,000. By accrued interest is 5,400. Someone please help me calculate this, tally this.
3,88,000.
Which side? Debit side?
This thing here is.
3,88,000. Check the debit side, please. I think the debit side is greater.
Yeah.
3,92,600.
3,92,600. Find out the difference, please.
4,600.
4,600. What did they say in the sum, that where should I put this difference? 3,92,600. They're saying that the difference has to be put into security premium account. My security premium. The difference is to be put in security premium account. Now, this is on the credit side, so in the journal it will come on the debit side. So this will be security premium account debit to capital reduction.
The capital reserve.
Capital reduction. From capital reduction account I am transferring now. Amount is 4,600. 4,600 being capital reduction written off. Right? Now let's make a balance sheet for this, guys. Balance sheet. Liabilities, rupees, assets, rupees. Authorized share capital. They haven't given you the authorized share capital. We will tally it off. I'm putting a question mark. Issued and subscribed capital. issued and subscribed capital. Under issued and subscribed capital, you will have 8% cumulative preference share capital. Right? Now for liabilities, the rule is add credit, subtract debit. Right? So for liabilities, the rule is add credit, subtract debit. Let's see how do we do this. We have, as per balance sheet, the value is 4 lakhs. Now, you have 1 lakh on the debit side, so subtract. Then you have another 3 lakh on the debit side, but then you have 3 lakhs on the credit side also. So you subtract 3 lakh, add 3 lakhs. That's it. 3 lakhs. Then you have equity share capital. Right? Equity share capital as per balance sheet is 3 lakhs. Now, you have equity share capital on the debit side 2,40,000, so you will subtract that. Then you add 60,000, subtract 60,000, so same. Then you have 32,000 on the credit side, so you will add that. Then that's it. Someone please tell me how much is that? 92,000. Then you have reserves and surplus. Under reserves and surplus, you will have security premium. Security premium is given to you as 10,000, and here you have security premium on the debit side 4,600. So that is 5,400. Security premium is going to be 5,400, right? Okay. Next, what else do we have? Security premium is gone. Next, you have 9% debentures, right? Let's see this. You have secured loans. Under secured loans, you will have 9% debentures. Now, 9% debentures as per balance sheet is 1,20,000, and you have debentures 30,000 on the debit side. So this will be 90,000, right? Then you have unsecured loans, not given to you. Then you have current liabilities. Under current liabilities, you have sundry. First of all, you will have accrued interest. Accrued interest was 5,400. You have 5,400 on the debit side, so nil. Then you have creditors. Creditors, I don't think we made an entry with it, so 1,70,000 as it is. Bank overdraft. We did not make an entry with it, 1,92,000. Let's move on to the assets. On the assets, you have fixed assets. Under fixed assets, you have goodwill. Now for assets, the rule is add debit, subtract credit. You have goodwill on the credit side, full amount nil. Next, freehold property. Freehold property. Freehold property is given to you as 1,20,000. There is no change in that. Then you have leasehold property. Leasehold property is given to you as 2,44,000. Then you have plant and machinery. Plant and machinery is given to you as 3,20,000. No, do we have an entry with plant and machinery? Yes. Plant and machinery has been written off to the extent of 40,000. So in that case, that will be 2,80,000. Right? Then you have furniture. Right? Furniture is 80,000, and furniture has been written off to the extent of 80,000. So entire furniture is gone, nil. Okay. Then you have investments. nil. There are no investments. Then you have current assets. Under current assets, you have stock. Stock is given to you as 60,000 and stock is on the credit side 20,000. So that will make it as 40,000. Then you have debtors. Debtors as per balance sheet is 1,20,000 and debtors on the credit side is 17,200. So this is going to be
2.
1,02,800. Next, then you have preliminary expenses. Preliminary expenses 5,000 on the credit side, so the entire amount will be nil. Then you have profit and loss. Again, profit and loss, the entire amount on the credit side nil. Then you have bank. You do not have bank in the balance sheet, so you have it only here. So let's see this. Bank. Bank on the debit side 64,000, right? Then you have bank on the credit side 14,000 subtract, bank on the debit side 12,600. That's it. Someone please help me get this.
62.
How much?
62,600.
62,600. Someone please check this. Someone please check this. How much is the amount tally figure?
8,49,400.
8,49,400. 8,49,400. Right? That finishes the sum. We'll stop this here for the day. Thank you very much.